This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the JDfn FOREX Report.
Good afternoon, traders. Scott Norris here with your FOREX Report. We are wrapping up another week on Friday, September 26, 2008. We began the week with a big move lower in the dollar and have since seen a whole lot of nothing. The majors have been bouncing around erratically inside some clearly defined and other not so clear ranges. The choppiness can certainly be challenging, but the amount of active trading opportunities is outstanding. Most days have produced at least 5 swings of 60 to 100 points. Confined to ranges and channels, this means a mix of dollar strength and weakness. With some of the price action has been a little random and tough to foresee, many of the swings have begun from pre-existing support and resistance levels. This means we have the opportunity to get in such trades with relatively tight stops and big profit potential. So, while it is admittedly a volatile market, there are plenty of places to still make money. The fundamentals have been clearly bad. Both breaking news and scheduled economic releases have brought confidence among consumers and investors to very low levels. This is not only true in the U.S., but around the world. Stock markets globally are being hit hard as the banking system continues to buckle under the pressure of bad leveraged investments. Ben Bernanke and Hank Paulson spent 2 days on Capitol Hill this week, expressing to the House and Senate just how important it is that a bailout plan is implemented as soon as possible. President Bush reiterated several times this week that quick action is needed to avert crisis. We couldn't agree more and can only hope that Congress can approve a smart plan in a timely manner that will truly help restore confidence and help the economy as a whole stabilize. We'll keep our fingers crossed this weekend as a decision may be handed down on Sunday. The big picture for the U.S. dollar is full of uncertainty. Of course, this also holds true for a great number of other currencies. We have seen a great deal of indecision over the last 4 days as traders and investors speculate what bailout plan the government will ultimately approve. Optimism came and went, which brought on big swings higher and lower in the dollar and yen. Ultimately, we see any big bailout plan as a detriment to the greenback. By increasing government debt and flooding the economy with more money, we risk foreign investors shunning the currency. However, the financial markets are in such a fragile state, we do not believe governments and central banks around the G7 are going to allow the dollar to collapse. It certainly wouldn't benefit anyone. We cannot say whether or not intervention to support the dollar is already taking place, but we see it as a distinct possibility if the buck starts falling fast next week. Hedge funds and other large speculators may also favor a strong dollar through the end of the year after being driven out of dollar shorts in August and only just being able to start building longs. With these two major forces looking for the greenback to gain, we find it hard to seek shorts. For active trading, we're still open to longs or shorts on the buck. However, we believe the dollar will eventually resume its run higher on the daily and weekly charts. Until Monday, have a wonderful weekend. Take care.